Hi everyone, this is Jitan here and welcome to another episode of Traders TV. Today's episode, we're going to be talking about the different types of trading orders that are available to traders today. We're going to be talking about how you can trade the market to the long side, to the short side, and if you don't know what those terms mean, then we're going to look at that in the video as well. So let's get started.
When trading the financial markets, there's quite a few different types of orders that are available to traders. Let's have a look at some of the most common. So we have what we call a buy or a long trade. This is basically used by those who want to enter the market right now at the current market price because they believe the market will go higher. You've also got a short or sell order, which is used by those who want to enter the market right now at the current market price because they believe the market will go lower. Now you also have what you call a buy stop. And this is basically used by those who want to enter a long trade or a buy trade at a price level that is above the current market price. It could also be used as a stop loss for a short trade. You also have something called a sell stop, and this is used by those who want to enter a short trade at a price level that is below the current market price. It could also be used as a stop loss for a long trade. Then you have something called a buy limit, which is used by those who want to enter a long trade at a price level that is below the current market price. It could also be used as a target price for a short trading setup. Then you have something called a sell limit, which is used by those who want to enter a short trade at a price level that is above the current market price. And this can also be used as a target price for a long trade. Now this may seem like a lot to digest, but there are quite a few platforms that do make it a little bit more simpler for traders. So let's have a look at the SmartCharts platform and let's have a look at some of these orders. So here we have the SmartCharts platform, and on the left hand side we can actually see we've got the different types of orders. We have buy, sell, buy limit, sell limit, buy stop and sell stop. Okay, now this is actually what we call a manual terminal. In some of the other terminal windows, we have specific strategies, as you can see here, which already give you the entry and exit criteria, okay, for that particular setup. So doesn't mean it's going to win or lose. It's just giving you some variables of where to get in, potentially where to put your stop loss, and potentially where to get out. Now if we look at this manual window, these are how the sort of orders work. Okay, let's just say, for example, for a random setup, I just wanted to go long on the market when the market took out this price point here, this high point. Okay, just for hypothetical sake. All right, so let's call that level around the kind of 93.53 area. So because the market price is below where I want to get in, or another way to put it is, I want to get in when the market pushes higher at a higher price level, then I'll be using something called a buy stop, okay, which is, I've just put in the number here at 0.9353 in this hypothetical example. All right. Now, if the market goes up, okay, and so let's say over the course of the day, it goes up and it takes out my 0.9353 level, then it will enter me into a buy trade. Okay, so as the market goes up, okay, in my favor, then I could be potentially making money. But if it goes down, then I'll be losing money. Okay, so of course we need to put a stop loss on this to risk protect the trade, because if I don't put a stop loss on this and it goes against me, then I could lose pretty much my whole account. So risk management is going to be very, very important. So let's just say, for example's sake, we want to put a stop loss below the low of that bar there. So let's call it 0.9280. So you can see here, I put a stop loss at a fixed price of 0.9280. Now in this example, we have a buy stop. So if the market did push higher, it would enter me into a trade here. Now, if the market went lower after entering a trade, then it would get me out at this price point here. Okay, so at least I've controlled what my potential loss is going to be. But of course, if the market moves in our favor, then we want to get out and collect our winnings at some point. So let's call that point around here, 94.27 area. Okay, so 94.27 area, just a random sort of area. So I've just put in 94.27 there. Okay, so now I've got my buy stop where I want to get entered into a trade. I've got my stop loss to risk protect my account just in case it goes against me. But I've also got a target price in there to collect any potential winnings that I may have. So if I went ahead and placed that order, you can see here in the big green letters, risk, 1%. So basically what this means is that this trade will risk 1% of my trading account. So how does it define that? Well, it takes what the risk on the trade is, and the risk on the trade is your entry price to your stop loss. That's how many points or pips you have at risk, okay? Then it will use that number and it will use 1% of my account, so how much I'm willing to risk, and basically it will divide the number and it will give me a unit size in which to trade at, okay? So this is already calculated for you in this particular platform, okay? It does all the calculations for you. So if I pressed OK, what you can see is that it will get me into the market at this price point here. So if the market pushed higher, it will trigger me into a live trade. Now, if the market triggered me into a live trade, if it didn't make it to my target price and it came all the way back down, okay, and if it came all the way back down, then if it passed this level here, it will get me out at a loss, okay, and that loss will be 1% of my trading account, so whatever I was willing to risk on the account. Now, if the market did not reach that level and it kept on going up to the target price, then it will get me out of the trade at whatever winnings that is going to be. So you can see the importance of understanding that trading is about winning and losing. Very important that you always try to protect your downside, okay? Because there are trades where you're going to get it wrong. So risk management really is the hallmark of trading.
So now you know a little bit more about the different types of trading orders that are available to traders, and you know a little bit more about trading generally. If you're interested in learning a little bit more about Learn to Trade, then click on the link below. I'll see you on the next video.